Hey everybody, welcome back. Well, to start, 52.92 is not the end of the world. Rallied up, and then we know exactly what knocked us down. We're going to go right into that actually, but let's just talk about the NASDAQ, which actually held its ground today of all things. So you have the end of the quarter, and maybe we're starting to see some people putting on some new trades for this quarter. We saw some movers today. We're going to get into that in a second, but we need to talk about why RTY is actually the worst performing of all the indexes today. So let's talk about what happened and then how we can benefit from it. First and foremost, the S&P Global Manufacturing PMI number came in lower than the previous number, which led everybody believe that the actual ISM manufacturing PMI number might come in weaker. Now, this is a really important distinction here. So what you're going to note is that we are actually 47.8 previous, 48.4, and 50.3. Now, 50 is a big number. And I'll explain why. When you have any of these ISM manufacturing numbers or you have the service numbers, anything PMI related that is between that sweet spot of that 55, we'll say like this is 55, and then we'll say that this is 45, right? Well, we'll throw it this way so that you have contraction and expansion. So anything over 50 is expansion. Anything under 50 is contraction. So you were contracting on the manufacturing PMI side for a very long period of time. Contracting on the ISM manufacturing PMI, you'll note that the growth that has been coming has really been coming from services. ISM splits into manufacturing and services, right? So why is this important? Well, if we're growing here and we're starting to grow here, and we're expanding on manufacturing, then the chances of a rate cut are nowhere near as good as expected. Let me explain. So ISM, when you look at PMI, Purchasing Managers Index, it's broken down into services and it's broken down into manufacturing. In front of you is services. Services will actually come out this week. I believe it's on Thursday that it'll come out. But for our intensive purposes, we still have some other data to get through tomorrow, JOLTS jobs. But what I want to do is just show you this 50 line real clear. So if we just come straight across here and we just drop that arrow, you can see that we have never really had any time below 50 here. So services PMI has been expanding. So if you have two prongs of Purchasing Managers Index, and one is contracting and one is expanding, then you can suggest that, hey, maybe we have to lower rates. Maybe we're okay there, right? You can say that we're having some pressure on one side of the market. If services is expanding and manufacturing is expanding, it's a problem. So when you look at manufacturing, most people are going to look at this and say, well, that's not that big of a deal. The issue with it not being that big of a deal are two things. Number one, you're now at that 50 line. Let's get rid of this and let's make it a straight line and come straight across. And I do appreciate everyone's comments on these videos about what you want to see. I also appreciate the sharing of these videos. For me not running ads, what tends to happen is the algo doesn't show it as much. So please keep sharing these if you find value in it. It means a lot. It seems like we're getting through to a lot of people and what they need to be paying attention to. So now we have PMI and we have the manufacturing. Okay, so now we know that there's two prongs to this, right? We have the service prong and we have the manufacturing prong. And one of those was above 50 services, and PMI has been where? Okay, the manufacturing has been below 50. All right, so this is telling you everything that you need to know. You have not been up here since this level, since 22. So this is a very big deal. Now, it's even a bigger deal than that, and I'm going to explain why it's a bigger deal than that, because that's on the downswing. Does this look like we're on a downswing or an upswing? If you had to draw a line, someone said, draw me a line, are we in an uptrend or a downtrend? You're going to go, well, I think we're in an uptrend. Or you could go here and say, I think we're in an uptrend, right? Either way, you're not going to say that you're in a downtrend from 23 to 24 now. You're certainly not going to say that, right? That ship has sailed. So now we know that that ship has sailed. Okay, and we know that we're having issues there. Now, take a look from this perspective. Now, this is ISM manufacturing over 5 years. And this is different than what we just saw because the other one was a bar chart and this is a graph. Now, I like looking at these from different avenues because it tells you different things. Yes, you can see obviously the same kind of level here, right? You could actually say, well, here's your channel, and then you're breaking out of your channel. Okay, we could have that talk. That's not the problem. Here's the issue. So if I come here and I draw a straight line at 50, just dump it straight across. When was the last time that, forget this, that we were here? People say, oh, we haven't been back here since then. Okay, that's a fair assessment, but there's a huge difference here. We were on a downtrend during this period of time. We're not on a downtrend right now. So we're on an uptrend. So the last time that we were in an uptrend on something like this was right here. So are we setting up to start seeing more inflation? This is where the problem starts coming in, right? This is really where the issue overall starts becoming a much larger issue, because the problem in and of itself is not that we're back to this level and they're not going to raise rates, but are we going to start seeing a rise in inflation? It is, I don't know how you could come out with an environment where both manufacturing is going higher and services are going higher, expanding, and think that you're going to have a weak labor market. It's not realistic. I mean, just think about this logistically. If you're going to go for a job and the two areas are some kind of service area to get a job, or some place to get a job is some kind of manufacturing place to get a job, and both areas of those businesses are not contracting. They're not contracting, right? We know that. They're not. They're expanding. How are you going to have a weak labor market? You're not. That's the answer to the question. So then the question becomes, well, what's this going to do to rates? And this is where it gets interesting. So for people that don't know, this is CME Group. You could just type in CME FedWatch Tool right here, and anybody can view this for free. There are paid services associated with this, but anybody can view this for free. And I would suggest that you spend some time with this because it does let you know what's going on out there. So if we take a look at day one, March 28th, and we look at now, the chances of rates staying the same May 1st were 90%. Now there's 97.7% chance of rates being where they are. So the chance and probability of a rate cut in May just dropped from a 9.3 to a 2.3. Now, it might not sound like a lot, but that's a huge percentage drop. So that's the first thing. Second thing is if we extrapolate this out and go take a look at June and say, well, they're going to cut in June. And of course, we have way more data, so the probability of that's still going to be high. Well, this is where it gets really neat. So the probability of it staying right here now is higher than it was, right? Okay. But the chances of a rate cut, of one rate cut in June have gone up a lot. And the chances of two rate cuts has basically gone to zero by then. You're at 1.3%, right? Because if this is the current rate, current target rates right here, and this is the current rate, and you have a 41% chance of being here, 56 and 1.3, and you look at the difference, that's an 80% chance or an 80% drop chance of that second cut. Go out to July, and we're going to stop there. But hopefully you're getting this. So the chances of us being here was less than 25% in the same spot. Now the chances of us being here are 28%. That's a difference. That's a big difference. It might not sound like it, but the chance of two rate cuts by July now has dropped. The chance of three rate cuts has basically gone away. It wasn't that big to begin with. So what are they doing? Well, they're kicking the can down the line. And as they kick the can down the line, that's going to affect very specific sectors. Now, for our purposes, what's in front of us are just the main sectors with the S&P. We have other graphs with much larger sectors, and there's some little dichotomies that are going on here too. But what I want to show you is where we were at the beginning of the day. And then we have an event, and an economic event that happens, and that happens at 10 o'clock. And from that 10 o'clock, so we're going to scroll this back to 10 o'clock, and I just want to show you this. So what happened from 10 o'clock on? You saw the following. XLE, XOP led. XLC came in second, but then you start to see something with XLV coming in. Cloud's in here twice. You have a couple duplicates. But what do we see happening here? SOX becomes the low of the day. So let's go back to this so that we get this. The SOX is currently at the low of the day. Let's go back to that 9:30 and start there. So I'm going to clean this off for a moment so you can see very clearly that we're starting right here at that 9:30. Call that back to that 9:30. So we're there. All right, perfect. So what you're going to see is that the SOX was actually leading today. And you can see up here, I mean, these things absolutely exploded out of the gate. And we're going to talk about that a little bit. Why I think they did that, but we're going to get a little into that. So if you could take a look at this, oh, it's not that big of a deal on the day. Drop it from 10 o'clock, and you have a completely different day in the first half hour. Now, I'm telling you this for two reasons. One, you need to start looking at where the money's going. Whether you want it or not, the money's going into energy. And I think that this is not just an inflationary hedge, but this is also a geopolitical hedge. I think that's why we're seeing that money flow into energy. So we talked about this on Saturday. I would strongly suggest that you pay attention to that. We actually went into it last Saturday as well on why the sector seems to be breaking out. But you really want to pay attention to how we dug into it this past Saturday. I will link that video at the end of this, and I would strongly suggest that you take a look at it and that you watch it. But it's really important that you get this concept, because when you're looking at this, you're going to see that the SOX actually closed at the low of the day. But cloud names seem to be moving higher, and they are above the SPY. You always use the SPY as your demarcation line, because that'll just tell you where the players are. Biotech's starting to lift again. Do we want to look at that? Why is XLC lifting? And this is really interesting. So today is April 1st, and we're starting to see some buyers come in some of these other names, but energy was the focal point. And just to kind of hammer this home, if we just go to a bear chart for a second, throw in the candles, and then just go directly back and how this whole thing started with RTY and going, well, why was that the worst performing? Because you are tied most to interest rates than any other sector because you're smaller companies. Then you look at regional banks today. that were setting up to finally start to break out. And what they do? Completely matumboed, complete rejection right off that level. Now watch when you put in the moving averages. You're still above, but if you're going to take a look at DPST, that looked like it was breaking out, which is the 3X ETF, you're back below that 55 SMA. I use a 55, a 12, a 22. You should use what you're comfortable with. Take a look at Nail, which is the 3X home builder. Now all these home builders are moving up on the fact that, oh, they're going to cut rates. Again, if both parts of the Purchasing Managers Index are expanding, you're not going to cut rates. It's not going to happen. So this puts us in a very awkward position. And I think this is very important for people to get, that this is an issue. Now, how big of an issue is it? We're about to find out because we have JOLTS jobs tomorrow, and that's something we have to pay attention to. But if you take a look at XLF today, you sold off. And a lot of these big dogs sold off today. For example, you saw Goldman sell off. Let's pull this down. And you can just see how we acted once this news 9:30, rallies, 10 o'clock, and it's been straight down ever since. It never came back. JP Morgan, very similar action. So these are the kinds of things that we're seeing, and I think that this is very important for us to pay attention to and say, okay, is this something that is going to be a one-day event or not? It's very hard to see how this is going to be a one-day event, and I think that's why you started to see some panic in the TLT. I'm going to go to a bear chart here. But even when you can see the gap down, and then as the news started to come out, it went from bad to worse. And let's clean all this off. And you can see that very clearly here that it just was not a good thing at all for traders today in the market that were doing anything with interest rate sensitive ideas. What we did see strength in varying pockets. And that strength, I think, is kind of interesting because you saw it in individual names. So there's 3 individual names that I would point out that I was very surprised that we saw the strength that we saw today. We're going to get into that. The other thing that I think is very surprising is that energy just pushed. Every dip in energy was bought today. It wasn't even close. If you had to go through sectors and say which sector had the most net dip buying, it's not even close. It was energy. It was straight across the board. Exxon, XOP. You could just pick any name that you want, and you're going to just note that they all closed right near the highs. And you're constantly seeing this now. So it's becoming pretty clear when you start looking at Chevron or PSX. You could just pick a name, MPC. It doesn't matter. You're literally throwing darts against the board and they're just going higher. So there's very little to say here. I would expect this to continue. This was the one sector that when you were putting trades on today, you didn't really have to worry. Now, this is where it gets interesting. So when I was looking this morning at data that was on institutional desks, one of the net sellers out there was Meta. So I candidly short Meta this morning, and then it just absolutely ripped on me. Here, I'll show you. And it just absolutely ripped out of nowhere. Well, this is where it gets interesting to me because who has to buy like that? Who would buy that fast? There's only a couple people, right? You're short, okay? You're short or you're retail. But institutions don't do this. Institutions don't go, oh, I need to get in right away. This is somebody that is short, retail, that is playing it, right? That's all the only people that would do this. Institutions continually buy over a period of time. There's no hurry for them unless there's a news event, right? So look at the difference between something like Meta. And then take a look at the SOX and watch this. So that is the SOX. Now, straight up, as I like to say, is not a pattern. And after this did its thing, everybody got all giddy and it's time to get back in and to go away. That's why today when we were trading NVIDIA, for those that were swing traders, I said, if you're in the swing trade, you're probably going to want to stay in the idea. If you're day trading, it's the same thing we've been talking about. It's support and resistance lines. Get rid of this magnet. It's support and resistance lines. And when you got to one, well, that was pretty much the end of it, right? And you could see right from there, that was it. So I would strongly suggest that you look at your support and resistance lines. For us, the easiest and the most self-identifiable one is this 892. It's like clockwork. It's literally like clockwork. I can't say it enough. You can set your watch to it. AMD is very similar, but look what AMD did as well. We're straight up. Well, straight up's not a pattern for institutions. It is for retail. They'll get all giddy and they'll buy it. And you can trade it. It's just don't be there when the music stops. But we did see some movement in some names that I thought was pretty interesting and I think warrants us talking about that is outside. I think it's outside of what we're seeing in the general market. For example, the first name that came to mind that I was looking at was Dell. This was pretty fascinating because you broke this doji and you look like you're going to gap fill and you start getting these tighter and tighter dojis right in here. And then you just drop the simplest of moving averages in. And again, I use a 12, a 22, and a 55. You should use what you're comfortable with. But note how it starts getting closer and closer to that line. And now it just hugs that line. And then it gets to a point and it just beelines straight up. Well, they're decision-making spots. whether you're using a 20 or a 22. That's a decision-making spot. So Dell made a decision and it broke out. If you were to go here and take a look at, let's take a look at the volume for a second. It's not above average volume, and it did it. So it's something for you to take a look at. But there are some names out there that I thought did move and they just stayed there. It was kind of staggering. So if you take a look at Google, for example, you just could not get through this level. And it was rejection after rejection after rejection. And this is massive selling at that level. Well, today, this is some of the largest buying that you've had coming in the beginning of the quarter. So whoever wanted to buy today and was waiting for the beginning of the quarter, they bought today, and they bought very aggressively. And we can see that. Even if you take a look at that buy, you're hitting the line. That's a 50, but you're hitting that line, but it encapsulates really all the buying to mid-March. So that's a pretty substantial move, I would think. And then finally, if you take a look at MU, to me, this was pretty much like the move, the strongest move out of any of them. And there's even patterns here that I look at. This is called the rising three. And it's pretty much like one of the strongest patterns out there. It actually might be like looking at that might be a super technical rising three. There's a feature here on TradingView. I'll find it, all candlestick patterns. So they actually plug these in. Yep. So they actually call it a rising three right here. They actually call it by its name. And this is not something I set up, but they're fairly accurate on their patterns. And then right here, you just see they're actually calling it a rising three. That's pretty much the most accurate pattern that there is. Rising three and falling three, they're the most accurate patterns out there when it comes to the market. But the strength that was in this was staggering. And it's not something that you would expect. And you did it on above average volume. So there are three moves that happened today in technology, to me, that didn't really follow the herd. And you'll say, well, what do you mean didn't follow the herd? Well, anything that went up came down, essentially, except really those three names. AMD dropped fast. I mean, I have 100 lines in here, but that is a major drop in that name today from where you were. I mean, you were down 4 points in like 15 minutes, like it was nothing, right? That's not healthy action, but you're seeing them pick very specific names. Now, why they're picking those names, I'm not sure, but I think it's very important for us to pay attention to that. There is one more trend that you need to be aware of before the market opens tomorrow. Now, before I get to that, just FYI, you might want to watch this tomorrow, this CXAI. They were playing it in the room today. They did quite well with it. Candidly, I have a position in it. The only thing that I would point out to you is the amount of volume that came in today was over 200 million. As a matter of fact, the volume, if we can pull this up and get to that level, 238 is where you were, which is about 75 million shares higher than any level it's ever traded at before. This was real news. This was actual news in a partnership with Google. It's real news. And I think when people get that, it's definitely bigger than what we're seeing here with the conjecture, what took this up and took this down here. So this may have this might have my attention for a little bit of time. It's definitely something that's going to be on my radar. I want to see how it acts. But when you have volume like that, you need to pay attention. But again, I want to go through this other development. So at the time recording this, PVH is down about 30 points, and we're going to talk about why. Now, on the surface, they painted the tape. It's called painting the tape when you put something on there that makes it look like everything's good. And basically what you did here was come out and say, look, we're in a position right here, 372, 353, sales beat, et cetera, et cetera. We're going to do a buyback. And by the way, we're going to come in at 215 versus 259 for first quarter. But don't worry, and this is what they always do, things are going to be just fine. We're actually going to beat expectations. Well, how are you going to beat expectations if you can't even beat this quarter? And the answer is you're not. You're just, it's called painting the tape. I don't know why they do it. If you can't beat this quarter, then you're not going to miraculously turn it around, right? And you see a decrease of 11% as compared to the first quarter of 2023. So they're talking about a decline. That decline went over like a ton of bricks. Now, the conference call is not till tomorrow morning when you watch this, just FYI, and the shares are trading lower. But this is forming a theme, and this is where it gets really tricky because you try and tie all this together, right? So you look after hours, and you'll see that this thing is just literally falling off a cliff. And there's at the time of recording this, there's literally no buyers whatsoever. You just have like scavengers and people that are covering, but there's literally nobody out there really trying to get into this name. But I think it gets even more fascinating. If you take a look at this, and then we take a look at some of the other names that have recently come out, and we start looking at things like, okay, well, you have Alta, right? And you could say, well, Alta, yeah, guidance wasn't great, and then they tried to rally, and maybe it will, maybe it won't. That's fine. But then you have names like Lulu, which absolutely imploded and blew up. And Lulu looks like it's getting ready to fall off a cliff. Lulu literally looks like that's pretty much setting up for, that 340, 350 level. I think that's pretty clear. I don't think anybody would doubt that this looks like it's falling off a cliff. You can't rally at all. And you're just seeing massive, massive dumping every chance that you get in that name. I don't think anybody would doubt that. Nike, when you take a look at it, same thing. you're hitting lows. Why? All these big companies, big brand names, they're all missing earnings and they're all lowering guidance. So you currently have an environment where we have PMI coming out on manufacturing and coming out on the services side, and those numbers are coming in higher. And at the same time that we're saying, well, these numbers are coming in higher and we're expanding, these companies are unable to meet their revenues. Now, the question is, are consumers spending their money at other places, or is this something more broader with the market that we have to pay attention to? That's it.